this module of the Profile Trading Development Pathway from Trade with Profile, a pathway designed to help you build toward consistency and trading skill using the profile as a key tool to help arrange the market information and make better trading decisions. If this is the first module that you've taken a look at, be sure to review the orientation materials and videos available on the Trade with Profile website or sent to you via email in the orientation to get you up to speed into our methodology and how we arrange things. In this module, we're talking about module 5 out of 16, using auction balances to predict pending moves. Using auction balances to predict pending moves. Like all of our modules, we begin with a challenge. So here's the challenge, and this is a common challenge that many traders face. It's how can you know when a move, in quotation marks, when the auction is in a move phase, may be coming, and when it does, how can you predict potential targets? So how do we know, how can, if we were looking at it, we know that the best place to be would be to anticipate a trend. When I can see the trend, and everybody can see the trend, you have to ask how much of the trend is left. But when there isn't a trend yet and you know a move's coming, how can you anticipate that? What would you look at? How could you potentially get around that so that you can take advantage of it? Well, there's a key auction principle around that, and that is that moves initiate from balance. Moves initiate from balance. Now, the risk of you not understanding this principle is that when a move begins, novice traders fail to recognize a true breakout, and then they step in too early with a counter move to their peril. Or they try to front run the next move and get squeezed. So they try to, too early, and they keep trying to catch the move, and they get squeezed, or they see an initial move and they think that's not going to go anywhere, and they take the counter position just to get run over. Both of those will do damage to your psyche, your confidence, and your account. The outcome of this module is that you're going to be able to observe balance and know how to incorporate balance areas into a trading plan. Now, if you recall from other modules, stripped to essentials, we can describe all market activity as either 1, distributing, also called imbalanced, and creating excess, or developing and balanced. And what do we mean by balance? Specifically, what do we mean when we say that moves begin from balance and end in excess, as Pete Stottlemyre, he's really the grandfather of the profile graphic, was the one who said this. So what do we mean by this idea of balance, and how can we see it? So first, what it is it's a market at rest where it's developing. So from module 1, we talk about that there's developing or distributing behavior. This is the developing phase, is balance. It's where price and value have converged. And it's a period in the auction where there's no directional conviction as the auction is preparing for its next move. And it's in this environment that we call the day time frame traders in control, meaning we're not going to get really big moves. It's going to be fairly muted moves, and references like the open, yesterday's close, yesterday's high, yesterday's low are going to be of importance. Balance can be thought of as both intraday or multi-session, and through this module we're going to look at how to see both of those. But regardless of the time frame, the behavior is consistent. There's rotations taking place around accepted prices, and we are not one time framing. And to get out of this, to break out of this mode, the auction needs new information, or it needs participants to break from balance and see if value resides elsewhere. So when you're in a balancing situation where price and value converge, as we talk about in module 4, it's a situation where everyone believes that there's a fair price, and it will stay that fair price until there's something that shifts the fundamental understanding of where value is, and then the auction will go off in a discovery to try to find out where that is. One thing that we can know is that when we are in a balanced auction, a move is coming. Now, first let's look at a balanced session. So this would be the intraday session. So a balanced session is when the market auctions back and forth from one price level to another, but maintains most of its TPOs and volume at price in an overlapping range. And this is where the auction establishes an unfair high and an unfair low and rotates back and forth around a point of control. We see this in normal days, normal variation days, and neutral center days, and they often end up looking something like this, where we have an established point of control right in the middle of the profile, and there is an unfair high and an unfair low, and there's a value area where most of the trade takes place, and there's lots of overlap throughout the session. And this is, very much, we talk about like a bell curve. It's very much like a normal distribution. And so, this is a normal distribution, one standard deviation, two standard deviations to give us kind of the statistical weight of what's happening here. But this is where we have a balanced session. Now, a balanced area, we're in a balanced area when several consecutive days exhibit overlapping range. More importantly, overlapping value areas as the market consolidates within a trading range. A balance area occurs when value is accepted and price is considered fair. A move out of balance generally requires new information to take the auction to new highs or new lows. So that's seen like this. So this is where I can, and this is one of the wonderful things about using market profile charts, is that I can isolate and see inside of each session to see where the bulk of the trade is and to see where those values are overlapping and where there are unfair lows and where there are unfair highs. This then becomes the balancing range. So I know when I see a scenario like this, that a move is coming out of this range, and until it gets above that high, gets outside of that low, this is the playground. Now, balance areas provide, recognizable areas. So there, when there's no new information, you can have a high odd, relatively low risk trade within the expectation that price will revert to the center of the range. So while you're in a balancing environment, the idea is to play from the outside in. Okay. Now, at the same time, you have to watch for failure at the extremes, meaning failure for the extremes to hold the auction. But if they do hold, target the return to the developing volume point control of the balancing area. Now, with that, we have some balance rules. So sometimes we'll talk about balance rules or bracket rules, but this is when the auction is in a defined balance or bracketed area with a key composite high volume node in the center. In this sense, the play is to defend the edges until there is a reason not to. And again, this could be intraday or multi-session, but the target is always back to the middle of the balance range and extension towards the opposite extreme of the bracket. When there is a valid break and it's accepted, then we can compute the balance zone width from the scene of the break to determine a breakout target. We're going to cover that in a little bit, but this is what this specifically looks like. So here's where I have several sessions of overlap. I have a balance, and this actually, in this case, happened to be a prior week low and a prior week high. That's helpful. But you can see here's a rejection, here's a rejection, and then here's the most traded price. Now, what happens here is that this looks like an attempt away from that most traded price, but again, we're just approaching the top of a balance area. So unless I can get above here and hold, the idea is to believe that this thing's going to go back lower. In fact, even though this day was higher, you can see in the Globex activity, the auction already started to move back toward balance. So the belief is that as long as I stay below that 2663, I'm going to head back toward that 2634. And in fact, the auction does that to the tick. Now here's another example where an auction actually had a prior area of balance, and the auction has now broken out of that. And so this was the beginning. There was a move here. There was a most traded price here, move here, and then the second day is come back inside of that. That's now establishing a range. So we now have a range of price. Now watch as we go through subsequent days of this range and just watch these extremes. As the auction continues to develop, notice it tests the low of this area, comes back inside. Notice how we're developing a high volume node in the middle. That next move is going to come when it comes, and that's the thing. We don't know. When we're in balance, we don't know. We just know from where. We don't know the when yet. And we know that while we're in this scenario, we're looking for a trade like that. We're looking to fade the edges, okay? So here's more balance as the auction goes on. Now, again, we know a move is coming What we can't know is when. And I have to be fair, it requires significant mental agility to switch from a rotational and balance trader to a break from balance trader. And you may find, and this is a question for yourself is, hey, maybe I'm just a mean reverting trader, or maybe I'm just a break from balance trader. Mean reverting, we could also say you're a fade trader. I'm a much better fade trader than I am a break from balance trader. I have to keep working on my break from balance. It's not something that comes natural to me, which is fine. But knowing which one you are. But here are some ways to think about breaking from balance that are trustworthy. Okay, so we talked about we don't know when, but we know from where, right? So when I look at a long-term composite, like on a chart like this was Tesla, starting to make its break in November of 2019. Note where this big, massive move started from. After really about 2 months of balance around that 341 node, that's where the move began. So eventually, the auction will make a significant attempt away from balance and that key composite reference toward the balance zone extreme. Note the composite level of the balance zone. Watch for impulsive activity, and it could come in the form of order flow, strong order flow. It could be high volume, a gap, something from the scene of the composite balance. And what your job is to monitor the tempo and volume at balance zone extremes. Meaning, that if I'm in that balance zone, there was a unfair high, unfair low. I'm watching those extremes. If think of, if the momentum, if I'm moving hard towards those edges, they're less likely to hold. If I kind of meander toward them, I'm still most likely in a revert to the mean type scenario. Once I've broken through that, I'm waiting for a time frame trigger to confirm. We should talk about those in module 14, and I'm going to hold, having a target in mind. Again, that using our 4 questions. What's the opportunity? What am I willing to risk? Would tell me that I'm right, would tell me that I'm wrong. Wait for confirmation, defend the scene of origination. Keep in mind that idea of the scene of origination. So, and also understand what leads to a move out of balance is there's new information. When we are in balance, the auction has accepted a price as fair. And so we need new information to be able to do that. And that could come in the form of a news catalyst. It could come in the form of a fundamental economic idea. There's typically some catalyst that causes the auction to seek new prices. And note that tempo and velocity are key to a successful break from balance. And at first, and this is always the case, at first, if you join a break from balance, you will have poor trade location. And this is why it's hard for me to get into it, because it looks like, oh my gosh, look how far I've already traveled. But it's going to improve quickly. So let's go back to, this was an example we were looking at of multiple days of balance around here. We're talking about, we know it's going to come from this 3440 area. We just don't know when. Boom. Okay, this move actually starts overnight and continues. Now, it's an open auction outside of range of the prior day, but notice that from the Globex close to the open, where they reopened and just gapped lower, the auction came up to that key composite and then pushed out with a single prints, lots of velocity, trend day lower. We close outside of this range. This is a break from balance. So if you try to take the counter trade in this environment, you're likely to get run over. Instead, this is something where I'm going to look for pullbacks or anything to hold to keep going in this direction until I either get into a new balancing scenario or counter that. But now I'm in the break from balance trade. Now where I would be wrong when I talk about the scene of origination, it would be back to where that move started from. So as long as I stay south, in this case, of where that scene started from, I'm in that bearish posture. Okay, here's a number of kind of cascading breaks from balance. And note how in every sense, there's a most traded price right in the middle here. Here's the break, closes outside. Then it moves lower, several days of overlap, builds a new balance area. Here's a break, closes outside. We talk about tempo, we talk about impulsiveness, things that you can look for that lets you know when you're going to get that break. One, again, where did it start from? Where did the move come from? And in this case, it started overnight from a key composite level, push and lower, big selling deltas, lots of sellers, impulsive structure. That's all indicative of a good break from balance. And as long as we hold and start developing down here, we're accepting that move, and it is likely to continue. And again, when you go back, you'll always find that the move really started from that key composite area. Now, when you know that it may be breaking is when it breaks the top of that balance area. So this is kind of the area that you're watching. So up until up here, it could be reverting back, but the tempo, volume, I mean, here it's all happening. We've got a directional open, you've got single prints, you've got strong delta, all from the exactly, at that balanced price. This is a good indication this thing's going to take off and keep running. And this can even happen intraday. Okay. We talked about those are all multi-session examples, but here are 30-minute profiles that are like, intraday sessions. And notice here's a point, here's a balancing area, here's an impulsive move that takes out that high with good volume, it gets further excursion. Chief, when you're trying to figure this out, is defining the bracketed range. Now, it's somewhat subjective, around this, but typically you're going to have some definable area, like this. And you may have a poke above, but you got back below it pretty quickly. Started into this area with some excess. But when you get something like this, see here it starts with a gap and it closes outside of that range. So as long as it stays below 39.13, I'm expecting this thing to keep going this way. Okay, here's another example. Multiple days of balance. There's a developing node in the auction right about here. So that's where my move is going to come from. If I can get above 33.39 or 33.99, if I can get below 33.04, that's my bracket, right? And again, it is somewhat subjective because you're going to look at this and you go, well, wait a second. There's trade above here and there's trade down here. Yes, but notice that whenever we get down here, it tapers, and so the bulk of it is kind of right in this area. And here they were able to establish a point of control below that with some taper. So that helps me define where the bulk of this range is. Here's the break. Impulsive day with strong driving behavior up to there, gap above, and off to the races. Again, this is where the market profile graphic can really help you see where these are, because you can see very clearly where the bulk of that volume is at price, because that's where the move's going to start from. And again, you just don't know, when, you just know from where. So you know where to monitor activity toward extremes. Now, this balance, which happens in all time frames. So you may find an opportunity that is a move away from balance in one time frame and a return to balance in another. And how do you think about that? Well, the most powerful move from balance trades are when there is agreement on multiple time frames. So what I want to do is I want to walk through a whole session that is a move from balance and what that looks like on a smaller time frame, to give you an idea of how it evolves from we're in a balancing range to we're in a breakout trade. Okay, so here's how we start. So here's an example of micro NASDAQ. We've got a range developed. Okay, and this day we open at the extreme and we're driving higher. So this is definitely behavior that is rejecting the new prices. So we're still in mean reverting mode. And that's the thing, we're opening right on the extreme, but we drive higher. Okay, great. And we're, this is what we talk about, like when you're in the extreme and you drive the middle, you're going back toward the most traded price, which that's what his next would be. That would go up here and then rotate back that way. Okay, that's where we start at. Okay, so far nothing's changed. Okay, a little bit later in the session, and we find that we're struggling to trade above this most traded price. Still have a very strong directional trade that's kicked us into the range. Okay, we move a little bit longer. We're still balancing here. Now notice, here is some balance taking place on a 5-minute basis right here. So not only was this the most composite price, but this is also the intraday price that has balance. So there's going to be some type of move taking place here intraday from this price. Okay, a couple more minutes, and it looks like we're breaking lower from that balance. Several more minutes, and now we're actually approaching back toward the open price. Now the auction has come into the middle of the range and now it's coming back towards those bracket extremes. If it were to take out that low, that would reverse a directional open and could lead to a reversal and a break lower. So we'll watch the tempo. So far, the order flow for the session is negative, but the RTH session is positive. If that were to flip, it could really change. Also note that the volume at this point in the session is above average. So we've got good volume, and that's one of the things that you're going to look for if you get that break. Okay, we're balancing. So here's another bit of balance taking place. Notice the break there, right? So there's a bit of balance and then a break. And boy, did we break. So let's talk about what's happening now. So we balanced and then broke. Strong order flow selling gets us back through, takes out IB low. This is now an open rejection reverse open type, and that reversal is taking place. So basically what that means, we open, we reject new territory, then we reverse back through that. With tempo, so now we have negative deltas on both the RTH and the ETH. We're above average volume, so relative volume is high. This is a break from balance. So this, and this feels like when they came back through the open here on the IB low, that's a place to get short. Now, that feels like, oh my gosh, I've got bad trade location. And this is the challenge of a break from balance trade, is you feel like you got bad trade location, but the tempo and from where you came is what you defend. Now, depending on your risk size and ultimately what you're targeting, you have a couple different areas to defend. One is the scene of origination right here. If you want it tighter, you could look at these smaller balance areas and defend here, right? And if you want it even tighter, there's another balance area and a break here, right? So if I trade back through this, that would be cutting off, as we talk about in Module 8, challenging strength. But so far, the strength is with the move from balance, okay? Let's keep watching. So now we've accepted. Here's more balance seen here. Another break from balance, lower. Okay, now we've actually moved low enough and we're establishing range of prices. Now notice, here's value way up here on this break from balance. Here is the bracket where we were come from. So we definitely don't want trade back above like this 560 area, or that would negate, and this would be a test, and then we go back into the range again. So we definitely want to stay south of that. Other things that would confirm this is if we could pull that VPOC lower, accepting these lower prices. And if we can do that, then we can go lower still. Okay, and we've accomplished that. Note that the VPOC is now shifted from way up here. It's now down here, and we now have a balancing range. Here's a high and a low, and that next move, so we're gonna watch. Up here, we can go that way. Down here, we can push this way. Keep balancing. Okay, here's an attempt toward the low of that range with tempo. volume is still high, this, and look where that move is happening from, right from balance at the bounce extreme, looking for this to keep going. All right, and it does, in fact, keep going again. Here's that break, so you're defending here. Here's another little bit of balance. Here's another break. See, this is happening, this is even on a 5-minute basis. This stuff happens. A little bit later in the day now we have actually traded back up into an area, a new area of acceptance. And remember, that bracket stream's way up here. Okay, so we're now way below that. We've established the volume point of control much lower from that. So, now it's the question of, can we hold, can we close? And we're, 1 p.m. Eastern at this point. We're nowhere close to the IB. So this is a double distribution trend day. So as long as we hold those distributions, this should continue to hold later in the day and actually get lower prices in subsequent sessions. Okay, out of that little balance area, look what happened. Here's that balance area. Look, more sellers, where do they come from? Right at the balance, boom. Keep pressing, would defend here. So this is actually a place you can add. This is a trend continuation opportunity. You're kind of looking for the low to come at the end of the day kind of scenario. Okay, keep pushing. Now, here, we'll go back one. So note this 543 of selling deltas, 149. This is at 1:37 p.m. Eastern. Okay, an hour later, we now have enough selling coming, or enough buying coming in to shut off this downward auction. So this actually ended up being an order flow trap. The buying offset the selling. That puts in a bottom. Now we're moving back to an area. There's a little bit of balance here. Here's a new move. Where's this likely going? Probably up here. If it can break out of that area and hold. Okay, it gets some excursion, comes back to this area. So we're building out a balancing range, making another attempt to the top here. Let's see if this one can go. Nope, we keep coming back. So we're definitely in a balancing range. So, looks like we're trying to pull that VPOC lower. If we can't, then we'll move up in this direction. And then here's the push, ultimately by the close, up into that range to that point of control. Okay, so all of the moves happened after balance. So we would balance and then there would be a move and you could defend that throughout the session. Overall, when we look at the day at the end of the day, let's look at what happened. Okay, we had a break from balance. We closed outside of that. Value is lower, so we'll expect lower prices in coming sessions. Now, when you have a break from balance, one of the questions is, well, how to, if I'm answering the 4 questions, how do I predict targets on balance breaks? Well, one is to measure the width of the balance range, add that width to the composite volume point of control to get an initial target, and that target might also be a prior balance zone composite volume point of control. What do I mean by that? Well, here's an example of a balancing range about $2 wide. Most traded price is at 68.14. So if I take $2 from 68.14, that would be 66.14. And by the way, that gets me right down here. That gets me right in this ballpark, which also happens to be a naked prior point of control. So that on a break from balance becomes a pretty cool target. When this thing closes outside of the balance area, I would look for it to move in this direction. Here's another example. As we've talked about, the auction moves from balance areas to balance areas, but here's, multi-session balance. Here's a push, strong directional day. Where is this thing going out of this balance area, right? Most likely, these composite levels from prior balance become the target. So at first, it's kind of a width of what the balance area is. So, in this sense, it's like 67.90 to 69.40. You take that and add that to the where the composite move started from, but then you also look and say, what's the larger composite picture to get even extended targets. Okay, here's another example. Prior balance makes a move. Where's it going? Likely that prior balance. Now, once that we're in a break from balance, how do we know that it's going to work? You know, because you're playing at the edges. Likely the market's already moved quite a bit, and you're like, oh my gosh, is this going to go back on me? What do I do? So here's a couple things to watch out for. And remember that confirmation is everything. And also acceptance is key. So go back and look at module 3 on acceptance. But you're going to watch for tempo and volume away from that balance volume point of control in the middle of the balance, either the balance period, area, you know, wherever you're marking balance by. And the auction will find additional participants willing to go in that direction. Short-term value migration in the direction of the breakout will confirm. So just like that example, we looked intraday and we saw the volume point control migrating throughout the session. That's a confirmation of that break from balance that started from that bracket high. And this can be on a 5-minute, 30-minute, or daily basis, depending on your time frame. And day type can also confirm. So if it's a trend day, that's certainly going to help. If it's a double distribution trend day, that helps. If it's a normal variation, we're getting significant extension outside the IB, that helps. But at the end of the day, when you have a break from balance, guess where you're going to close? Outside of that balance area. So right here, we close outside. That's a great confirmation. And this is a multiple distribution move out of balance. Here's the further acceptance. There's more time spent outside. So not only do they close outside of the balance bracket, but there's further acceptance outside of that. If we look at that on an intraday basis, this is seen as additional volume in the direction. If the move started here from balance, then there's a little bit of acceptance here right at that bracket, then a break, more acceptance. That's what you want to see to confirm, and you'll also hold those prices. So that means, hey, I'm going to hold this area as I keep going. Which brings me also to the idea of like, how do I know if the break from balance has failed? Because sometimes it does. That's in fact how we know that something is a test. Remember our 4 behaviors? There's a beginning, that leads into the move, then there's rest, then there's a test, then there's another move. This is a test, and we talk about a test is that we don't know, it looks as a move to start with, and then it fails. So this is where the auction is going to fail quickly and return to the scene of the attempted break. Often when this happens, stops are run and any break attempt trade should be exited. So if you see this thing run back on you quickly, it's a clue, I got to get out of the way. If you're nimble enough, you can actually take the counter trade, as the auction is often given confidence in the opposing direction. What do I mean by that? Well, so here's an example of where I have a prior, change the color here. I have a prior balance area, and the auction in this case actually opens above the range and is gunning back in this direction. So that gives me an opportunity to target, and the next day it gets follow through back inside that range. Okay, so it attempted outside of that with overnight trade, and then during the RTH session it reverted back. So in this case it actually helps because you probably weren't long from way down here. But notice that when we got back to where the break was, it still had good excursion back towards a prior point of control. It's like once it got back inside that range, it often does more in that direction. Similarly here, notice the break from balance, okay? And a couple of sessions later, boom, right back to where it is, and then look at the follow through. And this is a behavioral thing, is that the auction has tried to make a directional attempt away, in short order is returned back to the scene. You just told everybody you can't go that way. So then that, it's most likely the auction is going to go in this direction to try to find participants willing to take it back in the opposite direction. Here's another example of an auction, strong directional day, higher, break from balance, the next day opens, boom, okay? And not only does it get back below the open of the prior day, but then it also gets some further excursion and is set to close back in that direction, that would expect further lower prices the next day, if not the same day. And again, it's a behavioral thing, especially when it happens very quickly, like in this is single day. Auction attempts away from balance lower, comes back in short order. Look what it does the next day. So if you look to take this trade, okay, and you're defending the scene, and early on it looks like I've got acceptance, but then we come all the way back, you have to exit that trade. At least get back to the sidelines, make them see that there's additional participants willing to break again. Otherwise, this is the recipe. And again, if you're nimble enough, you can actually take the counter perspective and then again defend the balance area that way. So you're going to have to flip it and go the other way. So that's how we think about balance. Now, how does this pertain to our IB trades, if our IB go with or extension fade? Because remember, the two questions are, should I go with the auction in front of me? Should I fade it? Well, hopefully by now you've realized that a go with trade is a trade from balance. I'm going with, I'm looking for this thing to break free. Now, two ways that we look at the go with trade is that if the entry is established at the IB high or low, then you're likely catching a move that has already begun from balance in the session, and you're looking for new ranges as confirmation. Okay, so think what you're going to need to see to confirm that trade. And what do I mean by that? If it's already started. So if I've got an IB, I've got a most traded price here, and then here's the move that takes out the IB high, and you're entering near the IB high, you want additional confirmation, order flow, tempo that way to take this bad trade location and make it really good very quickly. If, however, you're taking the go with trade that is established favorable relative to value, so that's where I've already taken out IB high, but now I'm trading down here. In this sense, I believe that the auction that's in front of me is a balanced and rotational day that's going to keep rotating inside of this balancing range back toward that middle. So that's why when I take that trade, I'm looking for the trade to come back here initially and then maybe to the other side of the range as a second target. And related to that, if the extension fade is in play, when there's evidence that there's not enough tempo, volume, order flow, whatever, to carry the break from balance, so I'm fading the edges back to the developing point of control. Okay. Now let's take some of this and put this in context of some cases and some scenarios to further illustrate how this might play out. So let's say it's 1 p.m. Eastern, and crude is displaying a normal variation higher day. So that's where we have extended at least 2x the IB. We're currently trading above the IB high, but within 1.5 the IB. The current developing volume point of control is 35 cents below. The high of day is 15 cents above. Volume is tapering as we trade higher. The question is, where is the trade? Well, if I've already traded, if it's a normal variation day where I've taken the IB and doubled it, and I'm trading back inside of 1.5 and the point of control is down here, then I've already come off that high. So I'm most likely, if it's normal variation day, that means there's rotation. So then in that sense, I'm looking for the fade, also back towards that developing point of control. So that is, we're now balancing, and I'm looking for rotations. In this case, soybeans have a multi-session bracket from 909 to 921. The zone point of control is 719 or 917. The auction last closed above 917 with a normal variation higher day. What's the expectation for the next session? And what trade ideas do I have? Well, if 921 is the top of that bracket, we closed with a directionally higher day with decent directional excursion. I'm going to be watching. I'm going to be watching that 921. Can we gap above it? I'm expecting higher prices the next day, but I closed below that 921. So I'm going to have to wait and see what the next day brings. And it could be, if the tempo's there, it could be a break from balance, and I could be looking to trade outside that range. And by the way, if it's 909 to 921, so I got about 12 cents of range there, then from that 917, that could get me up to about 929 in terms of a breakout that I'd be looking for as a target. In this case, bonds are trading at the top of a multi-session bracket from 144 to 146 and 23/30 seconds. It's an open auction in range open with a normal higher day type. Cumulative delta is strong. The last traded price is 146 and 15/30 seconds. The high of day is 146.15 and IB high is 146.13. I'm sorry, last year price is high of day is 146.19. What is the trade and what are you watching for? So it's a normal higher day type. That means I already have evidence of rotations. I'm near the high of the day. I'm above the IB high. I'm most likely looking for this auction to fade. Again, likely because it's a normal higher day type. And even though I'm near the top of that bracket range, the normal higher day type near the top of that bracket range has said that we're likely just getting responsive trade, and I'm okay to fade back lower into that bracketed range. In terms of any other questions that I would have about that auction, if there, I would maybe ask if there's a catalyst, that's in play. If I had a normal high day, was there also, I mean, the delta is strong, but it's an open auction in range. There's just not a lot of directional conviction to suggest that I'm going to break that bracket. So I'm definitely watching for defense of that bracket as the session goes on. Okay, next one, NASDAQ is trending higher from an open auction in range open type and IB high extension. The IB was 75% of average. The current cumulative delta is strong. The move initiated from a multi-session balance. The current price is 58.67. Where is the trade? What other questions would you have about this auction? And if you're with the trade, what are you looking for? And if you're against the trade, how will you manage this? Well, other questions I have. So it's from a multi-session balance, but where's the top of that bracket? I don't know that. If I'm past that and I'm trending, that answers the question of how would I manage it? I would get out immediately. Like if I was counter that trade and I broke from balance on a trend day with strong cumulative delta, that's a recipe to get run over, not just for the single session, but for multiple sessions. That's a get out, reassess trade. If I was still inside the bracket, approaching a bracket high, I may be looking for opportunities to join that trend for subsequent sessions. And if I trade back through halfway back of that trend day, that would negate, because typically on a trend day, if I get about 50% retrace, that negates the trend. So I'd know where that price was as kind of an alert, but this could be the beginning of a big trade. Okay, takeaway. Trader recognizes a balance area and anticipates a break from balance, defending the scene of the break as risk, whether in narrative or in trade. Homework, if you are so inclined. A key objective of this week is to discern behavior that shows a strong ability to break from balance and how to think about joining that break, as well as how to know when it's countered. So as you prepare for this module, learn to identify areas of balance in the market. See if you can identify a recent move and then the balance area where the move originated from. So try to find a trend and see, where did that trend start from? Where is that balance area that it started from? And where is the point that you could have joined the move? Repeat that for various time frames. Do that on a 5-minute basis, 30-minute basis, 1 hour, 1 day. Just get in the habit of identifying a move from a balance area, and then drill down on that on a smaller time frame to find out where you could get in, what behaviorally was going on, to do that, and share those in this Pathways channel, or send us a direct message or email, and we'll be looking to follow up with that. That is module 5, using auction balances to predict pending moves. Learn it, use it, trade well.